Assalamu alaikum wa rahmatullah. Good afternoon to those who've just come in. This is always the graveyard shift, you know, after lunch and then after coffee, the numbers start to dwindle. But you can see some faces, and as long as we have one person on every table, it looks busy to me. Final panel session for today, and we've got amazing speakers here. I'm going to hand over to Wayne, who's the chairperson for the panel. Omar's already spoken, Omar Shaikh from IFC, but Wayne requires no introduction. His work with the Islamic Finance Task Force, the UK government, his involvement at the TCUK, the TheCityUK, and his former diplomatic roles has been very helpful, and his insight into Islamic finance at that level. So, Wayne, over to you.
Thank you very much, Bilal. As part of the continuous global expansion of Islamic finance, the use of Sukuk has become increasingly popular and more important. The Islamic bond market is now possibly the fastest growing segment of the world's capital market. While globally we have seen spectacular growth in Sukuk issuance, this has not really been mirrored within the EU, considering it's nearly 10 years, or probably just over 10 years, since the landmark German Lander transaction. Since then, little progress has been made until this year, when we had the issuance of two Sukuks, like London buses. They were coming along in twos by the UK and Luxembourg. But in the wider Europe, Turkey has, of course, been very active in Sukuk issuances. For the first sovereign Sukuk in the EU, who was first and the size is not important, and it's not relevant for discussion in this session. But it should be noted that both Sukuk were oversubscribed, indicating a demand by the Islamic banks and other investors. The previous speaker mentioned trade, and I should at least point out here that the UK government has recently announced a UK credit export facility to fund aircraft using the Sukuk, and that's a first for the UK. It's been done in other countries, but so that's another great initiative from the UK. Today we have a good cross-European panel with representatives from France, Valentine Baudouin, from Luxembourg, Marco Lichtfous, from Turkey, I'm struggling already, Muammer Shaikh, and Omar Shaikh from the UK, although he may say he's from Scotland.
Still part of the UK.
Yeah, just. But all of them are experts in this.
Reunited Kingdom.
The reunited kingdom, yeah. All of them are experts in their field. The question we've been asked to consider is whether the recent sovereign Sukuk will trigger other European Sukuks and corporates to issue more Sukuk, and were the UK and Luxembourg Sukuk one-off issuances. I'm going to give Omar the chance, with the home team advantage, to start the debate today. So Omar, perhaps you'd like to give some views on the question and whether you think there is more scope for sovereign Sukuk and corporate Sukuk.
I think definitely is the answer to that. I think there's not necessarily a direct relationship between the corporate Sukuk market and the sovereign Sukuk market. Of course, there is the theoretical curve, benchmark risk curve you can create of a multi-tenor sovereign issue, which would help price corporate Sukuks. But broadly speaking, as awareness, as education, as precedence builds out in the market, different stakeholders get more encouraged to engage in such. I know for a fact across Africa, we've been active advising various governments. They've turned to the UK and seen the UK's engagement in Islamic finance, and that spurred them on to create sub-sovereign state, like Osun State in Nigeria. They issued a Sukuk a few months back. So I can definitely see that will continue as a trend. I think the fact that it was oversubscribed 10 times plus shows the great commercial market opportunity that's there for Sukuk. Anyone involved in the sector can see there's a window of opportunity there. There's a captive investor group that are requiring to deploy their capital in a only Sharia compliant way or a preferred Sharia compliant way, and they make excellent buyers for such notes. I think the corporate market, I mean, you have GE, one of the most sophisticated players in the debt capital markets, who have entered into the space before. I think the European corporates should look more at this space. I think the Malaysian corporates and the Middle Eastern corporates have seen that, and creating a kind of Eurobond style structure would fit very well for that as well. And I think the final potentially interesting space is also the role of social impact bonds, which is something I know Westminster government has been looking at closely as well. There is a space for some innovation in that arena as well, to have social impact Sukuk bonds as well.
Let's come back to the UK question in a while, but first, Valentine, from our discussions before this panel, you were saying that the Islamic finance market is slightly different in France. Perhaps you would like to elaborate on that and the chances of Sukuk in being issued in France.
Yeah, sure. As regards for France, there has been a strong political determination in 2008 to promote Islamic finance. And in fact, I think that in France we have a strong banking culture and a strong retail banking culture. So the first product that have been developed are retail banking products. So one family take a full and banking account share compliant. But in terms of corporate issue, we have not, for the moment, we cannot see any sign that any corporates in France will issue Sukuk. I think maybe the message in France in 2008 was two things. First, we need to promote Islamic finance, and Paris needs to be a hub for Islamic finance because there is business opportunities. And then the second message, where we have 6 million of Muslims in France, and we need to offer Sharia compliant product in France. And in fact, that's more the second message that has been developed so far than the first one.
Interesting. And you don't think there's any interest in the French government in issuing a sovereign Sukuk to support some of their infrastructure or financing needs?
As far as I know, I don't think so, but maybe from corporates. It could be maybe corporates that will build the market of corporate Sukuk in France more than the government.
Okay, thank you very much. Right, Marco, Luxembourg, the other EU Sukuk. I mean, what is? And I know you're a regulator, and that also impacts on the way that on the demand for Sukuk. So perhaps you'd like to say a few words about that, and also your experiences in Luxembourg.
Yes, I think. Well, first of all, it's good to be home because I spent most of my professional working life in this city rather than in Luxembourg. So, but as an ex-regulator, and one of the things I think where Sukuks are really important, and especially sovereign Sukuks, is if we try and develop, and there's something I heard somebody say this morning, but so far Islamic finance, we're really concentrating on the corporate side, on the wholesale side. But the huge markets are not there. The huge markets are the retail markets. They're not being served. So as we're developing banking propositions for the retail market, these banks, they have a huge need for, in terms of Basel III, in terms of liquidity papers, they have a need for sovereign papers. Now, right now, there are no sovereign papers they can fall back on. So issuance like the UK Sukuk, the Luxembourg Sukuk can't be a one-off, and they can't satisfy this demand. So it has to go on. And I know from the Luxembourg side that the program is running. It's more a matter of finding the right assets to put in these Sukuks. And then as we were talking with Eleanor before, one of the main issues also is so far the Sukuks, both the English and the Luxembourgish one, are kind of, reshuffling money around in a different structure. What we really need to get to is creating new money, creating new investments, and trying to bundle those in Sukuks, public infrastructure, etc. So actually to help the economy grow rather than just reshuffling money around. And that would raise A, the acceptance, and B, also when when you're talking Sukuks, again, now we're talking Sukuks that are sold to corporates. We're really, it's a wholesale market. But if we want to fuel Islamic finance, it only goes through the acceptance and the widespreading in the population as a whole. And therefore, you not only need to provide the sovereign Sukuks for the banks to operate, but also as an instrument for investors, for retail investors that are looking for investments in Islamic finance banks. And we are setting up right now, and I'll talk more about, I have the honor of speaking again tomorrow about the first Islamic finance bank in the Eurozone that will be starting, hopefully, fingers crossed, in the next few days or weeks we should be able to officially announce it. But that is an evolution where this is really needed. So we can't stop here. We have to get going. And I think even countries like France, etc., they will soon recognize the need that if they want to satisfy these 6 million consumers, they have to go down the road. Whether it's going to be and hopefully, I heard this morning, if there's enough dynamic building, then some countries, even like France, can't refuse anymore to be part of that market unless they miss out on something.
Good. Thank you. Muammer, from Turkey, a different point of view. Of course, we use the term Islamic finance here, but we know that it's not used in as such in Turkey. But perhaps Turkey has more experience than many of us in the room on the issuances of Sukuk. So perhaps you'd like to give us the Turkish perspective, please.
Yes, as you know, in Turkey we call it participation banks, and we have 4 major participation banks for years in Turkey. But up until recently, 2 to 3 years ago, we started issuing Sukuk, especially the first Sukuk by the Turkish Treasury. But since then, all of our participation banks started issuing Sukuks in local currency or foreign currency, as we call in the normal, more mainstream finance as Eurobonds. But I can give you the Treasury is started issuing Sukuks more frequently, which we believe that this is the fundamental thing for the corporates to start issuing. I mean, this is the first. The sovereigns should create the benchmarks, and then afterwards the corporates will follow. I can give you the good news. There is in the pipeline in Turkey now the first corporate issuance is coming up, $400 million by one of our conglomerates in Turkey. So this is the good news. And what we believe also, all these, especially the Turkish lira ones, are listed at Borsa Istanbul. So we have a good history of, let me say, fixed income trading on the exchange, not on the OTC markets, which gives the advantage of the liquidity in the secondary market, which is the essential point in encouraging the issuers to issue Sukuks. So for now, and of course the standardization is also an important one, but the liquidity in the secondary market is the primary concern for both for investors and also the issuers.
Omar, you mentioned at the beginning the cost of a Sukuk against a conventional bond, and it's something I know that we discussed with the Treasury last year when they were talking about the issue of the first UK sovereign Sukuk. I mean, do you think that, and perhaps all the panelists might want to consider this as well, that the cost of Islamic finance now is being able to compete on, especially on bonds and other areas, with the conventional market? Are the costs coming down, or are we always going to be faced with a cost question?
I think it's a good point. The issue, I think Richard de Belden covered it this morning, around the value for money question that was brought by the UK Treasury. It became, in my view, just a bit of a kind of scapegoat terminology for the pause that was going on due to broader reasons. But the reality is, in Islamic finance, it has to be cost competitive. The pricing has to be competitive to conventional across the spectrum, not just in Sukuk, but in retail products and in investment management products for high net worth individuals and wholesale markets and insurance. It has to be price competitive. Otherwise, fundamentally, consumers, they might be Muslim, they might be ethical, they might be, whatever agnostic faith or whatever it is, they are unlikely to get more than 5% of the consumer market towards that. That, of course, varies depending on if it's a family office, mass affluent, or the low end. There's tweaks to that number. But generally speaking, the availability, the pricing, and the quality of the product has to match conventional. Is it a significant burden for the issuer or the structure of the bank? Well, actually, no, not at all. Otherwise, the industry would not exist. Yes, there are different processes, but actually going through that opens up the market opportunity to investors which otherwise would not be able to touch the conventional product. So the Sukuk, unlike conventional finance, and this is a critical point to note, conventional financial products are by default excluding those people who have an aversion to interest, whereas non-interest products, Islamic products, are open to everyone, the conventional players, plus those Takaful companies, those pension funds who can only deploy on a Sharia compliant basis. You actually got a bigger market, which, if anything, can give you the basis to price a bit more effectively in your favour, for that matter. You know.
So, Marco and Muammer, are you seeing this also in Luxembourg and Turkey, that the availability of Islamic finance is attracting greater investment from investors who haven't invested traditionally in the past?
Well, at least, let's say, the experience is relatively limited, because I think we're, on one hand, definitely from institutional investors, absolutely, there it's been proven. It still remains to be proven on the retail market.
Yeah.
But I think you have a much larger captive audience there, and it's like anything. It's almost like you're opening the market for further consumers, and you're especially appealing to consumers that have certain other priorities in life than pure return on their investments. They're looking at other things, and we see this developing in Europe everywhere, whether it's ethical finance. Look at ethical funds, look at all these corporate responsibility, all of these things. They are attracting a buyer that is looking at something more than just pure finance. We are educating the society in a way, whether it be religiously or ethically, that the people are attracted to this. And so I think you are able, I agree with you, that you're able to price very competitively, maybe not exactly at the same level, but it's like everything we buy in life, you know. We also go and buy cars because we like that brand, or and we're ready to pay a little more for that brand because it's the brand we like. Because if we only would look at the car from a means to get from A to B, then we would all drive, I don't know, Smarts around or something like that in a big city. But we don't, because we add value on other parts and other aspects of a product, and that is the same in financial services. And you just need to find that market that is ready to pay for another aspect of your product than just the pure financial return. And I think the society is really, especially due to the crisis 2007, 2008, and that we're kind of still in, sensitized towards this, and we have a much bigger volume of people ready to do this.
And it is similar in Turkey. What we were missing in Turkey, the liquidity management tools for our participation banks, and that was a big problem, and maybe it mitigated the growth of the participation banks potential, which is now around 6 to 7%. Now they have the tool. And we have, as I said, we have a good retail participation in fixed income products, even though we are 99% Muslim population. The participation banks, or so-called Islamic banking sector, is 6%. So the part of the reason is the non-availability of instruments like this. So they want to get involved in for example, the third bridge in Istanbul. So they want to finance. They would definitely feel much more comfortable financing the third bridge, because that is a tangible thing they can see, they can use. As you said, this is much more motivating to fund. So with these instruments, and we believe that there will be much more participation in the ethical finance products, I call it that way.
So Valentine, I know we've discussed that there's not so much of a interest in the Sukuk, but I mean that must follow in France as well, that if there was something that French Muslims could use, there would be growth. Would you say that was fair?
Yes, sure. And not for Sukuk, but for the product that have been developed for the retail banking market. In France, what we have seen is that it is not a demand market. So we thought that with the number of Muslims that we have in France, that the product will be much more developed. But in fact, I think it will be much more an offer market. One will have much more products. Maybe it will convince more people. But as far, even for the family Takaful product that we have in France, it was an issue not to be able to invest in euro-denominated Sukuk, because euro-denominated Sukuk, they are typically a very good, as you mentioned, retail product. And so now we are invested through this family takeover product in a Serenity Sukuk SICAV that will invest in Sukuk.
Well, I'm not sure we've answered the question we set out to answer, but I think what has become clear is that there is a demand for more Sukuk in the UK or across Europe, and as well as wider Islamic finance products. I know that it's interesting if you look at the comment from the head of the debt management office here in the UK, who's the guy responsible for eventually signing off on the Sukuk. I hope he's not here. He said last year they would do one UK sovereign Sukuk, and that was it. We would look at one, finished. Following the success of the UK Sukuk, what he said now is we are not looking at any other Sukuk at the time. At this time, and I think there's personally, I feel there's a subtle difference there. That if you couple this with the British government's ambition to cement London as a leading Western centre for Islamic finance, to find finance for infrastructure, HS2, regeneration projects, and a lot of the Islamic banks that are working in the UK at the moment are now looking at regeneration projects, and also the other stuff that the UK government's doing around Sharia compliance, student loans, home loans, small business loans. I think here in the UK, that I think we've all learned from the lesson and the success of this in particular about that there is more potential in the market. I think I'll stop the panel session there. Is there have we got any questions from the floor for any of us? Lady there.
I have a question for Muammer. Çakir, is that right? I think you've just had a massive 500 million Sukuk listed from the Islamic Development Bank, listed on the Turkish Stock Exchange. Has that created any excitement amongst the SME community? Do you see more corporate loans corporate Sukuk coming out of that?
It will be listed next week, so it is a good. We are very happy, we are very excited, and I think not only the IDB's listing but also the Treasury's continuous flow of Sukuks also encourages the corporate sector. That's what we believe, and also the banks are already using the participation banks, but definitely it will make the Sukuk market, especially in Turkey at Borsa Istanbul. We have plans to launch repo on these facility, Islamic repo facility on these Sukuks, which will make it a lot easier to invest and trade, and also that will definitely decrease the cost associated with that. So, we are trying to make it, and also we call. Let me tell you, we don't call it we don't call it an Islamic. The reason is that it's not only the Islamic investor base. It's not about for the Islamic. It's the investor base. We call it Sukuk because it is the structure itself. The structure. What is important for us is the structure. So anybody, even the non-Muslims, can invest in this structure because the structure is ethical and beneficial for the society. It's not because of the Islamic. Thank you.
With the rating agencies like Moody's and Fitch, to know whether they're taking an interest in this market.
The short answer is yes. They are very much engaged in watching the market closely and supporting, certainly in the UK, the initiatives being taken. Yeah, so all of the rating agencies I know that certainly in the UK are in dialogue with government and dialogue with the organisation I work with on the various products being offered on the market. I don't know if you were saying about the agencies. Any other questions?
If these Sukuk issuances were more kind of strategic than them being for a financing need, why does everybody seem to go for 5 years? They might as well go for the long-ended put them out because they would last longer. Like South Africa as well, they only did a 5-year paper, but they have the Reserve Bank there says that if they're going to go for dollar financing, they tend to go out for longer. So I wonder why 5 years seems to be what everybody goes for, and if you're making a strategic message, why not push it out for 10, 15, 20 years?
Well, I don't have the answer to it. I can only speculate, but I think part of it is it's a very new product for the larger population at heart in these countries. It's a very new thing, so there's some acceptance that needs to be built, and also I think to some extent even at the political level there's some acceptance that they have to see it work, and they basically think, well, if we take a risk, that's limited in time, and if it doesn't work, because they didn't know when they actually issued it if it was going to be subscribed. I mean, everybody was telling them it will be oversubscribed, but you know, politicians, they believe what they want. And so basically they were thinking, well, if we do it, then it's only 200 million or whatever. So, well, 5 years and then, you know, it'll be fine. The risk is limited. Now that they see this working, probably the next one will be first larger, maybe not longer, or it may be longer and not larger. And they'll kind of gradually work up to it. I mean, if you go back and you look at, we are comparing a really highly evolved bond market over the last 100 years to something that's in its infancy. So, and I'm sure when the first bonds were issued, I don't know my history that well, but I'm sure people in here know the history better, people also limited their risks in terms of size and time that they would issue. And over time, this market matured, and people became less risky to do it. They understood the market, they were familiar with it, and now it's a different thing. But even in the conventional market, you see actually times the maturities going back because of the refinancing, because of tax pressures and financial management on the country level. So I think just give it time. It was a test. I think that's the explanation.
I can add a couple of things to that. And the 5-year time period is the most liquid time period for the investors. And also in the 5-year is the most liquid one, if you look at it. And they, as you say, they feel quite unsafe because it's the first time they tap the market, and they want to be better on the safer sides.
If you take the primary market, so let's take some of these guys who have issued tier 1 perpetuals. Most of the market will be buy and hold, and if you just have a look at the Islamic banks in the UK, of which there's 20 groups doing it, you can add up the balance sheets. A longer term paper in the UK gives those guys quite an easy access to the kind of capital. I just think it's a little bit of the default position because everybody does 5 years because it's 5-year business planning. It's quite an easy one. I just think that it could have been a bigger strategic step to have actually pushed it to 10 years. And it would have been around for a lot longer, and that first step would have been bigger. I just think it's a small step where it could have just been to put something out for 10 years. Gosh, you're paying 49 basis points on the 5-year paper for Luxembourg, so people aren't buying it for the profit rate; they're buying it because of the AAA rating.
Just to pick up on Marco's point, though, I know from personal experience of the UK Sukuk that the decision went right down to the line. I got a phone call on a Sunday night at home saying we're going to make an announcement on Tuesday at the WIEF, and the government was right up to the very last moment was very anxious about the Sukuk, the size of it, how it would be received, and as Marco says, we all said it's going to be oversubscribed, you haven't done enough, but they were just taking a very, very cautious approach.
Absolutely right. I think just to echo those comments, I would see it very much as a first step. As you said, it's a process of evolution. If you look at the broader Sukuk market, it is relatively myopic in that sense. So the 5-year tenor is what you tend to see. We've had the issue in the Sukuk market that we don't have enough short-term paper, nor do we have enough longer-term paper. And actually, when the government did the consultation at the Islamic Finance Council, we advocated a multi-tenor issuance, which we thought would be a great way to create a yield curve and help pricing. But it's a first step, a positive first step. Obviously, it can lead to more progress in the direction you've mentioned.
And also, you have to view that investment as a hold to maturity. Yeah. So, I mean, 5 year for hold to maturity is quite reasonable investment period. instead of 10 year, 15 year. Okay, they might launch issue 15 year, but I would think that they would risk 200 million or 500 million. The investor base would be much smaller in the longer term.
We have time for one more last question because Bilal's looking at me. The gentleman there in the brown jacket.
Good afternoon. Can I offer some answers to the question?
Yes, please.
One of the principles of the Sukuk is a short-term investment, not a long-term investment. And it has been tried and tested all over the Gulf particularly. The short-term Sukuks are sold a lot quicker and redeemed a lot better and a lot quicker too. The second important issue is normally Sukuk issued for a project finance, part of the project finance. In most cases about a third of the value of the project. The 2/3 of the investors are coming from either partnership arrangement or whatever tools is used in Islamic finance. Those investors who invest on the 2/3 of the investment, they like to acquire the asset back from the Sukuk certificate holders after redemption. So the long-term investors are the ones who invest in the 2/3 of the project, if we just assume that, and the third part, they wanted to acquire the asset back again, because as you know, Sukuk is sold on a value, on a face value, day one, and redeemed on the same value, not market value. So if you are a long-term investor, you don't get return on your investment until you redeem the Sukuk. Thank you.
Thank you, Ram. Right.
Thank you, everyone, and thank you, Wayne, Omar, Marco, and Muammer, and Valentina. It's actually quite pleasant to have a female panelist, and I'm just looking at the program for tomorrow, and we have a few: Stella Cox from TheCityUK, yourself again, and we have Samina Akram, who's sitting just across down there. So it's healthy to have a bit of diversity in Islamic finance, and that's very welcome. Just a quick recap of today's proceedings and how things will develop tomorrow. We had an interesting opening this morning with two special addresses from Sir David Wootton, Lord Mayor of the City of London for 2012, who made interesting remarks about the city and the support the city has been giving to Islamic finance. We then had Lord Shaikh, who spoke about how Islamic finance should pick up momentum and go into the mainstream as opposed to limiting it to Islamic finance, the Muslim community, followed by Richard de Belder, who is a key member, who was a key member of the task force alongside Wayne Evans. He gave the kind of breakdown, the legal breakdown of the UK government Sukuk and what the challenges were. Nasir Ahmed, or I should call him Dr. Nasir Ahmed, he gave a very interesting insight as a professor would do and with references and sources to Islamic finance and the challenges and especially the crisis. Post-crisis banking regulation actually is in line with Islamic finance principles. Omar Suleiman, I don't know if he's still here or has he gone, but he gave an interesting presentation on how Sharia and the wisdom and the rationale behind Sharia and Islamic finance and why we're having these failings today and the impact of those failings. Peter Mayer spoke about the Middle East Association and the platform it offers for Islamic finance growth across the 24 countries and the credibility that this platform offers and trade being a vital part. We then had the Takaful panel, which was an interesting panel with expertise from the mutual and friendly society sector, 2 lawyers and a Swiss reinsurance insight into why Takaful is important and what it rests on, basically business volume and critical mass. And now we have this final panel here, which has been a really interesting panel. I've personally enjoyed listening to the panel. Sorry, I forgot to mention Omar Sheikh's presentation in the beginning, and for me, the points I've noted here, the seven principles he highlighted: understanding the market, political will, structuring the tax laws, regulatory guidelines, provisions of money market tools, capacity building, and education. Education being very key to all of this. So we've had an amazing day today, and I'm really thankful to the organisers, Basant Das, to all the speakers, the panelists, and all of you for being patient and contributing to this interesting first day. Tomorrow we're starting at 9 a.m. in the morning, so you could go to bed early and be ready for that. Thank you very much.